Okay, guys, welcome to our discussion on practice questions. We have covered some theoretical areas, especially related to accounting standard. So, the whole purpose of this practice discussion on practice question is to show you how you can be tested at the examination and you should practice on those questions. So, the intention of conducting this practice session is to show understand how our theoretical knowledge should be applied to given questions. Okay, so with that, we are starting our first practice session. So under this, I am basically focusing on very important area on your syllabus, that is IAS 16. Okay, basically through this one we are focusing on IAS 16 property plant and equipment accounting standard. So if you are well aware with this accounting standard, if you are familiar with this accounting standard, I hope you can easily understand these questions and you can easily approach the questions in a good manner, right? So let's try to understand how our theoretical knowledge that we have gained in our theoretical sessions can be applied to these kind of practice questions, right? So with that, I will start with the question number one. See, IS 16 property, plant and equipment requires an asset to be measured at cost on its initial recognition in the financial statement. So this is a theory that we have learned. Okay, we learned that property, plant and equipment should initially be measured at cost. There is no alternative to that. Initially, we should measure all property, plant and equipment at cost. Okay. EW, maybe company, EW used its own staff assisted by contractors when required to construct a new warehouse for its own use. Now there is a company called EW and they want to construct a new warehouse. To construct this new warehouse, what are they doing? To construct this new warehouse, they have used their own staff, right? They have used their own staff, and in addition to that, they are using the service of contractors when necessary. So this warehouse is constructed for their own use. That means this is a kind of own occupied property. I hope you can remember in our discussion on IAS 40 investment property, I explain you the concept of owner occupied property, right? Now see, in the question, what they are asking us to do, what they are asking us to do, identify whether the cost listed below should be capitalized or expense. So when it comes to IAS 16 cost, I simply give you a small hint in our theoretical discussion that whatever the cost that are necessary to bring this asset to the expected condition and expected usage should be capitalized. Under that, if there is any purchase price, we should capitalize. If there is any other directly attributable cost, directly attributable cost to the acquisition of an asset, we have to capitalize. Now in this case, we are not going to purchase a property. Instead of that, we are going to construct a building or a warehouse for our own use. Now you have to apply the knowledge that you have obtained. Mainly we have to see whether a particular cost item is necessary to bring this warehouse to its expected condition or expected usage. That is the point you need to emphasize, right? So let's go through each one. The first one is clearance of the site prior to commencement of the construction. So we are constructing this warehouse on a land. We can't just go and construct the warehouse on this land. We have to definitely do some kind of activities, maybe leveling, digging, likewise various activities on this land in order to make the land suitable for the construction. Without this preparation of the land, can we proceed with the construction? No. Without proceeding with the construction, we can't get this warehouse to the expected usage, expected condition. Therefore, this cost is necessary. We have to incur this cost in order to get the expected output. Therefore, this has to be capitalized. This is a kind of directly attributable cost. This has to be capitalized. The second one, professional surveyor fees for managing the construction work. So we have to pay to professional in order to manage our construction work. Without paying to them, we will not be able to get the warehouse in the way that we want. We have some kind of architecture or whatever the structure in our mind was, probably we have put it on a paper. So we want the construction works to be managed in that way. To manage that, we need some professional and we have to pay to them. Without this payment, we can't get what? We can't get the exact requirement. Therefore, it is a directly attributable cost. Without this cost, we can't get this warehouse to the expected usage, expected condition. So we discussed these terms in our theoretical session, right? The next one is EW's own staff wages for time is spent on working on construction. Now, in this case, in the question also, they are very specific that they are using their own staff for the construction work. Now these construction their staff has a effort. They are putting their effort to construct this building, so this effort has a value. We have to recognize this value in our accounts, because it is a kind of directly attributable cost to the construction of this warehouse. Without this effort of our staff or the staff of the company, we can't construct this building. Therefore, definitely we have to get the staff salaries or wages for their time spent on working on the construction. Without their effort, without their labor, we can't construct this. Therefore, it has to be capitalized. We can't take it to we can't just charge it to the P&L. We have to capitalize it. The final one is a proportion of EW's administration cost based on staff time spent. What is that? Now that means in company there are some kind of admin cost. No, those are kind of general cost. Those are kind of general cost. So what they are trying to do is they are trying to allocate or actually absorb. They are trying to absorb a part of this general administration cost to the construction of the building. Can we do that? IAS 16 is very specific on that. IAS 16 is clearly stating that we can't capitalize that kind of general administration cost, because it is not incurred specifically on this construction. It is incurred for the management of the business and or administration in general. Therefore, it is not directly attributable to this construction, so you can't recognize it as an cost of the asset, so you can't capitalize it. Instead of that, what you can do? You have to expense it. You have to charge it to the statement of profit or loss as an expense during that period, right? So this is the understanding you should have. Now this question covers your understanding on the cost of property, plant and equipment. Okay, cost of property, plant and equipment. We discussed that there are three parts under the cost: purchase price, then directly attributable cost, and removal and dismantling cost. In this question, they have not tested the dismantling cost part. They have basically question on those directly attributable cost. In addition to that, IAS 16 is very specific on some of the costs that cannot be capitalized at all. So that has also been tested at this question, because general administration is a kind of cost that we cannot capitalize. So it is very specifically mentioned in IAS 16. So that knowledge has also been tested here, right? I hope you are clear about this question. So let's move to the question number 2. An entity purchased property for 6 million $6 million on 1st July 2000. We'll take this as 2020. Yeah, 2023. So we'll consider this as 2000, rather 2013. We'll consider this as 2013. Okay. Entity purchased a property for $6 million on 1st July 2013. The land element of the purchase was 1 million, and the expected life of the building was 50 years, and residual value nil. On 30th June 2015, we'll take consider this as 15. This X will take as 1. 2015, the property was revalued to 7 million, of which the land element was 1.424 million and building was 7.56 million. On 30th June 2017, the property was sold for 6.8 million. So the question is, what is the gain on disposal of the property that would be reported in the statement of profit or loss for the year to 30th June 2017, right? Now, in this kind of a question, now see, you can see they have tested your knowledge on revaluation, they have tested your knowledge on depreciation, and they have tested your knowledge on disposal of property, plant, and equipment. So let's try to understand this. Now, the company has purchased a property on 1st July 2020, sorry, 2013. They have purchased a property on, so I will take some more space. Okay. Now they have purchased this property on when? 1st July 2013, right? The cost was $6 million. $6 million. But the thing is, within this property, there are two elements. One is land and the other one is building. So we have to separate this element, because whenever possible in a property, we have to separate the land element from the building element. The reason is land is a non-depreciable asset, whereas the building is a depreciable asset. Therefore, in order to continue with the depreciation, definitely we have to differentiate building from the land, right? So I have to differentiate it. There is a land and also there is a building. Now I am going to differentiate it, right? So original cost or the initial cost is, as per the question, the total cost is 6 million. Out of this 6 million, only 1 million is related to the land. Then remaining 5 million should be related to the building. The total property cost 6 million. Out of this 6 million, 1 million is related to the land. If that is the case, the remaining 5 million should be linked to the building. That is the understanding you should have. Then the next thing is the expected life of the building was 50 years and its residual value nil. So this information is useful for you to calculate the depreciation. So let's move on. On 30th June 2015, the property was revalued to 7 million. So in order to make revaluation things easy, I will take the total as well. See, now the cost of the land is 1 million, cost of the building is 5 million. Accordingly, the total is 6 million. Right. Now what happens? On 30th June 2015, this property has been revalued to 7 million. Now, before performing revaluation, we should know what is the carrying amount and all the stuff. For that, we know when it comes to land, it is the cost. Until the revaluation take place, only the cost is recorded in the land account. But when it comes to building, we have to do what? We have to depreciate this building. We have to depreciate this building over its useful life. As per the question, the useful life of the building is 50 years. As per the question, the useful life of the building is 50 years. So I will take it here. Depreciation calculation. I will show you the depreciation calculation. So our cost is 5 million of the building. The building cost 5 million. There is no residual value divided by the useful life. We have learned this depreciation formula for straight line method. Depreciation cost minus residual value divided by what? Divided by useful life. So what is the, this gives us the annual depreciation. That means depreciation for 1 year. But in this case, see, they have revalued the property by 30th June 2015. That means from 1st July 2013 onwards, we have to see how many years have passed. How many years? 1st July 2013 to 30th June 2014, 1 year. 30th June 2015, 2 years. That means they have revalued this property after 2 years from the date of acquisition. We have acquired the property on 1st July 2013 and we have revalued the property after 2 years, that is on 30th June 2015. If that is the case, you have to get the depreciation for 2 years period. So 5 minus 0 is the depreciable amount. It should be divided by 50. It will give us 1 year depreciation or the annual depreciation. It is 0.1. We have to divide it by 2 to get the accumulated depreciation for the past 2 years. So it will become 0.2 million. 0.2 million. Therefore, you have to deduct this accumulated depreciation from the building, 0.2 million. It should be deducted from the building and total will also get 0.2. Now you can take what? Now you can take the carrying amount, carrying amount as of 30th June 2015. Now, this is the carrying amount as of 30th June 2015. 30th June 2015. Okay, I will get more space to do the sum. Right. Okay. What is the carrying amount? When it comes to land, cost is 1, and we know carrying amount equals cost minus accumulated depreciation minus if any accumulated impairment loss. In this case, there is no impairment loss yet. Therefore, the carrying amount of the land is 1. Just a second. Okay. So carrying amount of the land is 1. When it comes to building, cost is 5. Up to 30th June 2015, we have depreciated 0.2 million, 0.2 million. So our carrying amount would be 4.8 million, 4.8 million. Altogether, what is the total? The total carrying amount of this property is 5.8 million. That is the carrying amount. On this date they have revalued the total property, they have revalued the whole property at $7 million. The revalued amount is 7 million. So what is the revaluation gain no loss? Now you can take it. You know how to take the revaluation gain no loss. So we can get the revalued amount. In this question they are telling revalued amount is 7 million, but what is the carrying amount on the date of revaluation? We have discussed so many examples related to the revaluation. So the carrying amount of the total property on the date of revaluation is 5.8 million. Therefore, from this 7 million, you have to deduct 5.8. 7 million, you have to deduct 5.8. Accordingly, it will give you a revaluation what? Revaluation gain. It is a revaluation gain. Why it is a gain? The revalued amount is greater than our book amount, greater than our net book amount. Therefore, we end up with a revaluation gain. So you have to add this revaluation gain, right? But in this case they are telling out of this 7 million, land element has 1.24 and the building element 5.76. Actually, I think we have to get the revaluation separately. This is the total revaluation gain. But when it comes to if I take this in this way, when it comes to land, as per the question, the land element is 1.24. If we separately revalue the land, the revalued amount is 1.24. If we separately revalue the building as per the question, it is 5.76 million. It is, when it comes to building, it is 5.76 million. So these are the revalued amount for the respective components. The total is 7. Total is 7. So now you have to take the carrying amount of the land. So the carrying amount of the land on the date of revaluation is 1. When it comes to building, it is we have taken as 4.8. 4.8 is the carrying amount on the date of revaluation. 4.8. 4.8. Right. Now you can take the revaluation gain. In case of land, the revaluation gain is 0.24. In case of building, it is 5.76 minus 4.8. So the revaluation gain is 0.96. 0.96. So the total is 1.2, right? So this is how we have to revalue this property. We have to revalue this property. So now I will record the revaluation gain here. Revaluation gain. So when it comes to our land, it is 0.24. In respect of land, we have get a revaluation gain of 0.24, and in respect of building, it is 0.96. 0.96. Accordingly, the total revaluation gain is 1.2. Now you can take the new carrying amount of this property. So I will take more space on this. So the new carrying amount of this building, now you can take it. New carrying amount is how much? When it comes to land, it is 1.24. When it comes to building, it is 4.8 plus 0.96. Altogether, it is 5.76. If you take the total building, it is 5.8 plus 1.2. 5.8 plus 1.2. The total property carrying amount is 7 million. See, after the revaluation, our new carrying amount of the property has become the revalued amount. So that's what you need to understand. That's what you need to understand. Okay, now we have adjusted up to the revaluation. Now we have adjusted this schedule up to the revaluation. Now what happens? After that, what happened? On 30th June 2017, the property was sold for 6.8 million. The property has been disposed. The total property has been disposed for 6.8 million. When? On 30th June 2017. Now we have revalued this property on 30th June 2015. After that, how many years have passed? Then 30th June 2016, 30th June 2017. 2 years have passed. After the 2 years from the date of revaluation, we have disposed this property. We have sold this property. Now we have to take the carrying amount of the property on the date of disposal, because the question is to calculate the profit or loss related to the gain on profit or loss on the disposal. Now what can we do? We need the carrying amount of the property on the date of disposal. We need the carrying amount of the property on the date of disposal. So how can we take the carrying amount of the property? Now we know the new carrying amount. So this new carrying amount is on it is on 30th June 2015. After the revaluation entries, from this we have to deduct the depreciation in respect of the building. We have to deduct what? We have to deduct the depreciation in respect of the building. So what is the depreciation amount? Now please be very careful when you are calculating the depreciation. When you are calculating the depreciation, now I am going to calculate in the depreciation for the period from 2015 to 2017. That means from the date of revaluation to from the date of disposal. Now what is the value of the building now? From 30th June 2015, the value of the building will become 5.76, because when we are adjusting revaluation, we are eliminating all the accumulated depreciation on the date of revaluation, and after that, we are again depreciating the asset. We discussed those things in our theoretical sessions. Okay, please refresh your knowledge on theoretical sessions. So the after that, instead of cost, we are taking the revalued amount. From this revalued amount, we have to deduct the residual amount. In the question, there is no residual amount. So this depreciable amount, from this revalued amount we are deducting residual amount. This has to be depreciated over the remaining useful life. As per the question, original useful life was 50 years. Out of this 50 years, we used this asset for 2 years until the date of revaluation. That means when we are looking from the date of revaluation, only 40 years remaining. That means original useful life 50. Out of that, we have utilized 2 years until the date of revaluation. Then the remaining useful life is 48 years. So this new carrying amount or the revalued amount should be depreciated over the remaining useful life. Should be depreciated over the remaining useful life. Now this gives us annual depreciation. The depreciation charge for 1 year. In order to take for depreciation for 2 years, we have to multiply by 2. Now you can calculate 5.76 divided by 48. Annual depreciation is 0.12. You have to multiply it by 2 accordingly. The accumulated depreciation from the period between 2015 to 2017 is 0.24. 0.24. Now you have to deduct this depreciation. You have to do what? You have to deduct this depreciation from building. Please keep in mind, we are not depreciating land. We are depreciating only the building. So it is 0.24. So the total property value will also drop by 0.24 due to this depreciation. Now what can you do? Now you can take the carrying amount. Now you can take the carrying amount of the property. Carrying amount at which date? Carrying amount at which date? Now in this question, we have to take the carrying amount on the date of disposal, which is 30th uh, June 2017. So what is the carrying amount? When comes to land, it is same 1.24. When comes to building, after the revaluation, revalued amount was 5.76. Out of that, I have to deduct 0.24. Accordingly, it is 5.52. 5.52. And the next one, the total property, 7 is the revalued amount. Out of that, we have to deduct the subsequent depreciation 0.24. Accordingly, the total property amount is 6.76. This is the carrying amount of the total property. This is the carrying amount of the total property. So this property is sold at what amount? As per the question, the property is sold at 6.8 million. The property has been sold at 6.8 million. So now you can take the sale proceed. The total property is selling at 6.8 million. Now, what is the gain or loss on disposal? Actually, it is a gain. Now, as per our books, this property is worth of $6.76. $6.76 million. But we are selling this property at a value more than the carrying amount, which will result in a gain. So, what is the difference? 6.8 minus 6.76. So, the answer is 0.04 million. Answer is $0.04 million, right? So this is how you should work out this question. This is how you should work out this question. So answers has have been provided in absolute amounts, not millions. So you can convert this 0.04 million into absolute amount. So these are million figures. So you can multiply this by million. So what will be the amount? 1 million multiplied by 0.04, it is 40,000. It is $40,000 by disposing this property. By disposing this property, we have earned a gain of $40,000. So this should be the correct answer. This should be the correct answer, right? See, in this question, they have tested your knowledge on revaluation. They have tested your knowledge on depreciation, and also they have tested your knowledge on the disposal of property. So you should be very familiar with this concept. In theoretical concepts, without those we can't work out these questions, right? I hope you are clear on how we worked out. So if you have any issues, if you have any concerns, you have to go and check our theoretical sessions again, so that you will be at a good position on from theoretical perspective, right? So I guess we are good to move to the next question. Question number 3. Question number 3. See, question number 3. Which of the following statement is correct? Statement number 1. If the revaluation model is used for property, plant, and equipment, revaluation must subsequently be made with sufficient regularity to ensure that carrying amount does not differ materially from the fair value at each reporting date. That is the statement number 1. Statement number 2. When an item of property, plant, and equipment is revalued, there is no requirement that entire class of asset to which item belongs must be revalued. If you have carefully studied our learning material, those two sentences are there. Okay, so actually these are from accounting standard. The first one, if we have performed a revaluation, if we are adopting revaluation model for our property, plant, and equipment, the basic rule is that we should perform the revaluation with sufficient regularity. We should perform the revaluation with sufficient regularity. There is no requirement to perform revaluation annually. There is no strict guideline in our accounting standard for the time interval for which we should perform revaluation. But instead of that, they are giving us a guideline that it should be made with sufficient regularity to ensure that our carrying amount does not significantly different from the market values or the pair values. Okay, so we have to ensure that our carrying amount is approximately equal or approximately similar, more or less similar to the pair value. If we feel that if there are indications that our carrying amount is significantly different from the pair value or the market value of the property, plant, and equipment, definitely we should perform the revaluation. So this question is on that. Therefore, the statement number one is correct, and actually it is a statement that has been extracted from the standard itself. This is very clear on the standard, right? The statement number two: when an item of property, plant, and equipment is revalued, there is no requirement that the entire class of asset to which item belongs must be revalued. What does this mean? I have explained what is mean by asset class. For example, if you take land, land is an asset class. Why? Just assume you have three lands: land one, land two, and land three. So you have three lands. So if you decides to apply revaluation model for land, you should revalue all the lands together. You can't just revalue the land one this year, and you can't just revalue land two after 2 years time. No, you can't do that. You have, if you adopt revaluation model for a particular asset class, there is a requirement that entire class of asset to which the item belong must be revalued. Therefore, this statement is factually incorrect because of this term no. There is no requirement. It is wrong. There is a requirement that entire class of asset to which the item belongs must be revalued. Therefore, statement number two is false. So this is the answer. So we have discussed this fact, I think, in our sessions, right? So I think we are good to move to the next one. So let's move to question number four. Let's try question number four. Okay, let's try to understand this. Tibet acquired a new office building on 1st October 2000, will take 2014. Its initial carrying amount consisted of the first one land, then the next one building and air conditioning system. Okay, now there is a company called Tibet, so they have acquired a new office building. So on 1st October 2014, and the initial carrying amount is like this. That means the total building value. This is the total value of this building, 16,000. So the composition is like this: land, building, air conditioning system. The estimated lives of building structure and air conditioning system are 25 years and 10 years respectively. When the air conditioning system is due for replacement, it is estimated that old system will be dismantled and sold for $500,000. Depreciation is time apportioned where appropriate. The question is, at what amount will the office building be shown in Tibet's statement of financial position at 31st March 2015? So the property has acquired on 1st October 2014. The property has acquired on 1st October 2014, and we are discussing on the financial year ends on 31st March 2015. I will take it as 31st March 2015. So what is the gap between these two periods? It is 6 months. October, November, December, January, February, March. It is 6 months. So actually what we have to do is we have to calculate the depreciation in this case for a period of 6 months. How can we calculate the depreciation? Now you have to be very careful. Now you have to apply your knowledge on complex asset to this, because in this case if we take the new office building, we can define it as a complex asset. Why? This building has various components with different useful lives. So we have understood that if there are assets with if there are assets which has different components with different useful lives, we have to separately depreciate these different components. Now in this case also, within this total building property, there are building structure, then there is a air conditioning system, and those two tangible items have different useful lives. Therefore, we have to depreciate it separately. So let's try to understand this question. So I will take values here in $1,000. $1,000. The first element is land. Initially, land has cost 200,000 in thousand terms, $200,000. So we can take it in the same way, because when it comes to land, there is no depreciation. Cost will become the carrying amount, right? Therefore, when it comes to land, there is no issue. When it comes to the next one is building structure. The next one is building structure. When it comes to building structure, the cost is 10,000, and their question is silent about the what you call question is silent about its residual amount. No, there is no indication for the residual amount of the building. So cost is will become the depreciable amount, since when it comes to the building structure there is no indication on the residual amount. So you can simply divide the cost by useful life in order to get the annual depreciation. Now in this case, so I will take in a way like in this way so that you can understand easily. So when it comes to building structure, cost is 10,000, and they are silent about the residual amount. So we discuss this residual amount. Therefore, I am deducting zero. Okay. And the useful life, as per the question, the useful life of the building structure is 25 years. So 10,000 divided by 25 will give us the annual depreciation. But from the period from during the period from 1st October 2014 to 31st March 2015, in the sense we have used this building structure only for 6 months. Therefore, we have to time proportionate this depreciation. How? We have to divide this by 12. Annual depreciation divided by 12 means it is a monthly depreciation, multiplied by 6, then it will give us the depreciation charge for a period of 6 months. So 10,000 divided by 25 multiplied by 6 divided by 12 means it is 200. Okay, the depreciation is 200. Now what can we do? So I will take in this way. The cost of the building is 10,000. Out of this 10,000 we have to deduct how much? We have to deduct the depreciation of 200. We have to deduct the depreciation of 200, right? We have to deduct the depreciation of 200. Accordingly, it will give us the carrying amount. So it would be 9,800, and the carrying amount of the land is 2,000, right? So the next one is air conditioning system. Next component is air conditioning system. So what is the cost? As per the question, cost is 4,000, but there is an indication on the residual amount. See, when the air conditioning system is due for replacement, that means we are dismantling the old system and we are purchasing a new system in 10 years time, because 10 years time is the useful life of this air conditioning system. We can dismantle, we can solve this old air conditioning system for a value of 500,000. So in dollar terms, thousand terms, it is 500. So it can be considered as the residual amount of this air conditioning. But I have clearly explained you the concept of residual amount with illustrations in our theoretical session. You should have that knowledge as well. Here that is not exactly the same thing, but in the question they have given us some indication on the residual amount. So from the cost you are deducting the residual amount, and you have to divide this by the useful life, which is 10 years. 10 years. So this gives us the annual depreciation. But we have used this air conditioning system only for 6 months. So we have to time proportionate the depreciation. For that, you are dividing this by 12 and multiplying this by 6. Okay. So what is the amount? 4,000 minus 500 is 3,500. It is divided by 10, multiplied by 6, divided by 12. Again, it is 175. So now you can take the cost of the air conditioning is 4,000. Out of this 4,000, we have to deduct the depreciation of 175. Okay. This will give us the what? This will give us the carrying amount as at 31st March 2015. So what is the carrying amount? 4,000 minus 175 means it is 3,825. 3,825. So now we can take the total 2,000, 9,800, 3,825. Altogether it is 15,625. 15,625. So this is the carrying amount that we have to show as at 31st March 2025. Okay. Sorry, 2015. 31st March 2015. So is there an answer like that? Yes, this is in thousand terms. 15,625 is the thousand terms. You have to add what you call okay. You have to add some three digits. Okay, then there is an answer. No, this should be the answer. This should be the answer. So the learning point here you have to grab is always when there is an asset with different components with different useful lives, you have to depreciate them separately. Then only you can get the final carrying amount. Okay, so the answer should be A, which is 15,625,000. Right. So I think we are good to move to the next one, no? So we are good to move to the next part, the final question in our today's discussion. Question number 5. The following trial balance extract relate to a property which is owned by Wheaton as at 1st April 2020 will take as 2014. The following trial balance extract relate to a property which is owned by Wheaton as at 1st April 2014. Right? So there are debit side and credit side. In $1,000 they have given figures. Property at cost 20 years original life it is 12,000 and accumulated depreciation as at 1st April 2014 3,600. On 1st October 2014, following a sustained increase in property prices, Wheaton revalued its property to 10.8 million. What will be the depreciation charge in Wheaton's statement of profit or loss for the year ended 31st March 2015? Right. So let's try to work out this. So I will get more space on this. So I will try to explain this with some kind of, now they are asking about the depreciation charge. For that you have to apply your knowledge on what we call revaluation as well. Okay, so I will show you on the revaluation part as well. So I will take the property account. So the brought forward balance of this property account is in thousand terms 12,000. 12,000. And also they have given us the accumulated depreciation account. Accumulated depreciation account. We know when it comes to accumulated depreciation, it has a brought forward balance on the credit side, which is 3,600. These are on 1st April 2014. Okay, so these figures are on 1st April 2014. The next one, you before entering into this question, you need to understand another small thing. That is the what you call how many period or how many years we have used this asset. Can you take this? Now the original property of this, yeah, property cost is 12,000. Property cost is 12,000. And the original life, originally we have estimated the useful life of 20 years. Accordingly, what should be our annual depreciation? 12,000 divided by 20. It should be annually 600. Annually it should be 600. Our accumulated depreciation on first April 2024 is, sorry, 2014 is 3,600. If we charge annually 600 and by 1st April 2014 we have 3,600 of accumulated depreciation. Cannot you take the number of years that we have used this asset? You can easily take 3,600 is the accumulated depreciation. Annually we are charging only 600. So 3,600 divided by 600 means it is 6 years. We have used this asset for 6 years by 1st April 2014. By 1st April 2014, we have used this asset for a period of 6 years. Please keep it in mind. With that, let's proceed. Now on 1st October, that means after 6 months, what they have done? They have revalued this property to a value of 10.8 million. Now you have to recall what we have learned under the revaluation. I gave you three steps. The first step is to eliminate the accumulated depreciation until the date of the revaluation. Until the date of the revaluation. So what is the date of revaluation? Of 1st October 2014. So we have to eliminate all the depreciation up to that date. How can we eliminate? So during this period, there is a period of 6 months, right? There is a period of 6 months from 1st April 2014 to 1st October 2014. You can just count that. So we have to calculate and charge that depreciation as well. Annually, we are charging 600. Okay. Annually, we are charging 600. So for 6 months, we have to charge only $300. Okay. For 6 months, we have to charge only $300. Where the very first thing is to correct, or we have to bring the uh, accumulated depreciation account balance to reflect the accumulated depreciation until the date of revaluation. So for that, I am charging depreciation for the 6 month of the year. I am crediting the accumulated depreciation account and I am debiting the P&L. So this is charged to the P&L. So here for your understanding purpose, this is the balance on 1st April 2014, and this is the depreciation charge for the first 6 months of the year. So with that, if you tally this account, now you will get the balance of the accumulated depreciation as at 1st October 2014. So now we are done with our depreciation. That is the first step. Sorry, now we are going to perform the first step. I have taught you when it comes to revaluation, the very first step is to remove the accumulated depreciation. The total of the depreciation 3600 plus 300 means it is 3900. So you are debiting the accumulated depreciation account and you are crediting the property account. You are crediting the property account or the asset account. That is the very first thing you have to perform under the revaluation adjustment. That is the very first thing you have to perform under the revaluation adjustment, right? The second step is what? The second step is to calculate the revaluation gain no loss. Now you can calculate the revaluation gain no loss. How can you calculate? First, you have to take the revalued amount. In this question, the revalued amount is 10.8 million. So I will take it in thousand figures, 10.8 million. Please be very careful with the figures. Now I am calculating this question in thousand figures. So you have to take whatever the figures into thousand figures. So 10,800 should be the revalued amount. From the revalued amount, you have to deduct the carrying amount. From the revalued amount, you have to deduct the carrying amount. So what is the carrying amount? The cost of the property, it is here 12,000. From the cost, we have to deduct the accumulated depreciation until the date of revaluation, which is 3,900. So 12,000 minus 3,900 is, it is 8,100. It is 8,100. So 10,800 minus 8,100 means we have a revaluation gain of 2,700. We are having a revaluation gain of 2,700. We are having a revaluation gain of 2,700. How can we record this? Simply you have to debit your property account 2,700. This revaluation gain, always revaluation gain is what? It is a kind of increasing the asset. Therefore, we are debiting the property account and you have to credit the revaluation surplus. Okay, you have to credit the revaluation surplus. I am not showing the revaluation surplus here because it is not directly related to this question, right? Now with that, you can tally this account. Just tally this account. The carried down balance should be how much? If you tally this account, the sum of the debit side is 14,700. So you have to take this to the credit side, 14,700 minus 3,900 is the carried down amount should be 10,800. 10,800. The carried down balance should be 10,800. Now we should depreciate. The question is the depreciation charge. The question is, what will be the depreciation charge in Wheaton's statement of profit or loss for the year ended 31st March 2015? Now, when it comes to the year ended, so I will take it here. When it comes to the year ended 31st March 2015, the depreciation has to be calculated for two parts. The first one is the depreciation from the period from 1st April 2014 to the date of revaluation. Date of revaluation is 1st October 2014, right? Then we have to take the depreciation after the revaluation. Depreciation after the revaluation, that means from sorry, this should be 1st October. From 1st October 2014 to 31st March 2015. 31st March 2015, right? So this part we have already calculated. So here we have already calculated 600 divided by 2 means 200. We have already calculated that. There is no issue on that. But the second part we have to calculate. After the revaluation, we have eliminated all the depreciation and the remaining balance of our property is 10,800. Now you have to calculate the depreciation based on this new value. What is the new depreciation? How can we calculate the new depreciation? The cost, the revalued amount of the building is 10,800. Revalued amount is 10,800. From this, we have to deduct any residual amount. There is no residual amount. And this has to be divided by the remaining useful life. Remaining useful life. As per the question, the original useful life was 50 years, right? Original useful life was 50 years. Out of this 50, we have utilized 6 years by the beginning of this year. By the beginning of this year, we have utilized 6 years. After that, by 1st April, by 1st, sorry, 1st October 2014, by 1st October 2014, we have utilized this as building for another 6 years. That means 0.5 years. 6 years in the sense it is an half of year. Therefore, we have to get the remaining useful life. We discussed this concept. Okay, we discussed this concept from the original useful life 50 years. We have to deduct the used life. We have to deduct the already used life. Okay, so 50 is the from 50 we have to deduct 6.5, so the remaining useful life is 43.5. 43.5. So 10,008. This will give us the annual depreciation. To get for 1 month, you have to divide this by 12. And to get for 6 months, you have to multiply this by 600. 6. Okay. So 10,800 divided by 43.5 multiplied by 6 divided by 12 means it is something like, I will round it up, 124. Something like 124. Okay. Right. Yes, I made a small mistake here. I made a mistake here. So, sorry, just a second. I made a mistake in getting the figures here. The first one is the depreciation for the first part of the year is 300. So we have credited 300 now. Depreciation from 1st April 2014 to 1st October 2014 is 300. So that is the first thing. And the remaining useful life, when it comes to the remaining useful life, our original useful life was not 50, it should be 20. No, in the question, 50 was in the previous question. So in the question, it is mentioned that 20 years of original useful life. Therefore, original useful life is 20 years. From that, we have already used this asset for a period of 6.5 years. We have already used this asset for 6.5 years. That means by the beginning of this year, we have used this asset for a period of 6 years. After that, during this period, by the date of revaluation, we have used this asset for a period of 6 months. That means 0.5 years, half of the year. Accordingly, the remaining useful life is 13.5 years. Remaining useful life is 13.5 years. Now what you have to do is Now what you have to do is you have to divide this by 13.5, not the previous value, 13.5, which is the remaining useful life. Okay, so I made a mistake when getting the original useful life. It should be 20, not 50. Okay, so all other computations are correct. So 10,800 divided by 13.5 means it is 800. So it should be multiplied by 6 divided by 12. So the value is 400. So this is the depreciation charge for the second half of the year. Second half of the year. So I can substitute it here, 400. So 300 plus 400 means it is 700. Okay. This is in thousand terms. This is in thousand terms. So you can simply insert it here, 700, and 1000 is there. No. So 700,000 is the depreciation charge for Wheaton's statement of P&L for the year ended 31st March 2015, right? So this is how you should understand this question. So just assume now, if you watch our, if you have completed our theoretical sessions, you can understand there is nothing beyond that. Okay, these are not questions developed by me. This is extracted from related study materials of Kaplan and all the stuff. So you can understand. So all the theoretical areas have been covered, but you have to cover them yourself. You have to cover them yourself, then you can easily do these things. Okay, so with that, we are winding up this initial session on our discussion of PPE practice questions. So in the next session also we will discuss some practice questions as well, right? So with that, I am winding up this session, and see you in the next session.